Hello and thank you for joining us for today's webinar. This session is being delivered as part of our Tourism Enterprise Development Programme. We've been working closely with industry over the last number of months to shape and roll out this programme and respond as best we all can to the unprecedented events of 2020 and the ongoing impact of COVID-19 on the industry. You can access a range of COVID-19 support materials as well as signing up for webinars and expert advice on tourismni.com and covid19.tourismni.com. We've initially prioritised financial support, including financial planning, setting financial targets, cost-based analysis and pricing, as these are areas that continue to be raised with us by the industry. We would encourage you to continue to feed in on priority areas. If you could complete the feedback form following today's webinar, we can continue to tailor the programme to your needs, or indeed at any time, just feedback through tourismni.com or covid19.tourismni.com. I hope you all found today's session useful and informative. Thank you.
Good morning, everyone. I'm Michael Williamson, and I'm your host for today's webinar. Thank you very much for attending. I hope you find today's session useful and informative, and that the tools that are going to be made available to you actually can be help you plan much better for the future. Look, I mean, as Rosemary said in her introduction, 2020 has been unprecedented. I don't think 12 months ago any of us would have foreseen the difficulties that we're all facing, and indeed globally that many industries are facing, not only tourism and hospitality. I think one of the biggest challenges we face quite clearly is that we don't know really when we're going to return to normal trading, albeit at least there is some hope on the horizon now with recent announcements regarding vaccines. So let's hope that you know, that comes along as quickly as possible, and we can try and get back on an even keel. But of course, the current situation that we're in makes planning for any business or any organisation extremely difficult, and on foot of that, then decision making is also incredibly difficult. And I think it's probably fair to say, and certainly in my experience, smaller businesses which tend to be resource constrained, that adds another layer of pressure on them, where maybe they don't have in-house financial assistance, or they find it difficult to bounce ideas off one another. So, you know, in many ways, the calculators that have developed by Fulge Ireland and Tourism Northern Ireland jointly are actually very much designed around those businesses, albeit they can be used by larger organisations as well. The topics that I want to cover in today's webinar are to give you a little bit of background to the calculators, because I think it's important to understand the logic and the thinking that's gone in behind them. And in some ways, attractions and activities, the calculator, I'll be looking at one of them, albeit there are two calculators. They're pretty much the same. Threw up a number of particular challenges when we were looking at design it, if only because, you know, it's a segment or sectors within which you have both the private sector and the public sector active largely in the same space. So therefore, with a lot of the other calculators that were produced, they were geared very much towards the private sector, because that tends to be the service provider. So a little bit of background, as I say, as to how they work and what they do, and I suppose what you need to do, and we'll see that in a very practical sense when we actually look at the calculators on screen. Also, just a quick note before we round out the session about other government supports that might be available, or are available indeed, and they're going to be listed on, and already are listed on, the Tourism NI website. There's a separate COVID-19 support centre in there which provides all the information, so it does on government supports. And then for those of you that are working with your accountant or someone who provides finance, if you're in the public sector, maybe some of the questions and maybe some tips and hints about perhaps some of the conversations that you need to be having. But we'll get to that. We'll get to that later on in the session. So we will. So the calculator, what is it? Well, it's a tool, and it's a tool to help you hopefully make better informed business decisions. We probably all have gut feels about how our businesses work and function, but sometimes it can be difficult just to put your finger on the pulse in terms of maybe financial information. And hopefully these, and particularly in a scenario where you may be considering reopening, or you're reopening under certain constraints, such as making sure that you can only host a certain number of people, or because we're on account of social distancing measures and so on, that can put added pressure on a business. So hopefully, rather than, I suppose, roll the dice in the hope that you can make money and find it that you can't, these tools hopefully will and should be able to help you make a decision before you open, or at least reinforce your gut feel that yes, it's the right thing to do. They are based on Excel spreadsheets, and really they test a range of assumptions which you will put into the model. There's already on the Tourism NI website in the COVID-19 Support Centre a user guide and a video as well for operating the models, but today I'll be a little bit more in depth in terms of entering data. And although they were clearly developed in response to COVID-19, they could be used on an ongoing basis. So, I suppose the lifespan on them is a little bit longer. So what do they do? Well, primarily they were designed around helping determine whether reduced capacity in organizations which ran the risk then of trading at a loss, whether or not it was appropriate for them to open, or whether it could indicate areas where perhaps certain mitigating measures could be taken which allowed a business to operate and make some money despite the fact that its throughput was going to be significantly reduced. For some organizations, and it may be in your case, but certainly in other sectors of the industry, they have looked at the opportunity of actually adding some additional services to their current portfolio. So, for example, restaurants, we know a lot of them have maybe transitioned, and it might be an interim step, or it might be a permanent step into offering a takeaway service, for example. Some other businesses tended to utilize space that they hadn't used in the past necessarily to capture back some of the capacity that they'd lost through social distancing measures. And inevitably, in any additional service, there is going to be an added cost to it, and therefore the model gives you an opportunity to have a look at any new services you might be planning and introducing, and whether or not it makes sense to do so from a commercial standpoint. The model also will help maximize performance of each area within your organization by providing some key performance indicators that you may then analyze and decide, look, maybe our payroll costs are a bit high there, we're making a bit of a loss this week, or we're projected to make a loss this week. If we do A, B, and C, it may not necessarily give you exactly the answer of what to do, but it should steer you in a direction of saying, well, look, I know I can maybe make some savings here, or if I have an opportunity to push more throughput in, and I think I can do that with maybe a little bit of marketing or pushing some information out over social media, then we might turn what is a break even or a loss into a small profit. It's designed really around looking at business in blocks of 4 weeks on a daily basis. So even though, and you'll see when we get to the calculator, we nominate the month that we're looking at, it's really just for your own information. Everything's just looked at in blocks of 4 weeks on a day-to-day basis, and it will give you an estimate for the full month, whether you put 4 weeks trading in or 2 weeks trading in. But obviously the more information you feed it, then the little bit more accurate that's likely to be. So as I said, the calculator can take account of different types of service delivery due to social distancing measures, and indeed it will highlight to you if it thinks that your volume, your projected throughput, is going to be higher than what it thinks your capacity is going to be, and it prompts you then to give an answer to that. But we'll get to that when we see the live model. It can, as I say, look at some options that you may be considering introducing, and you can test those to see which is the best thing to do, and we'll produce some key performance indicators. How does it work? Well, when you see the screen, it probably will look quite daunting from the point of view of there are quite a few colors on the page, but they nominate specific areas and where you can enter data and where you can't. It will produce lots of numbers on the page, but in fact, it asks you for the least amount of information that it can possibly get away with. And in fact, the model itself is very highly automated. And where you only need to enter, even though we're looking at 4 weeks, up to 4 weeks in any given month, where you're only required to enter information once, it will not ask you for it a second time. It will automatically take the information you enter on effectively in week 1, and it will replicate that into week 2 and 3. So for example, that could be information around average ticket prices, some of your cost base, a percentage of your income that goes to operating the business and so on. It will automatically take that information and populate the subsequent weeks. Now, you can change that information if you want in subsequent weeks, but by and large, once you've entered it, that's it. You don't need to worry about it again. And that then narrows down in subsequent weeks. Really, the only data you're starting to put in then is visitor numbers. And maybe 1 or 2 other small bits of information depending how you've entered it in the front end. But that'll become clear when we look at the calculator. It's all driven by formulas, so they're all protected, so they can't accidentally be corrupted. So it should continue to work. And as I say, it will provide hopefully a level of detail for you that will be very useful in terms of helping you make decisions. Sorry, just before I go on to the next one, the other point to say is that because of the nature and the size of businesses that may well use the calculator, there are really 2 choices for data entry. There's a detailed calculator which requires a lot more information in terms of staffing levels and grades of pay and so on, and it will give you more information as an output. But there's also a much smaller calculator that I refer to as a standard calculator. We'll look at that in some detail in a minute or two, but I'll show you the screen for the detailed one, and it requires much less information, and therefore for smaller businesses that don't necessarily have the information close to hand, that would be very easy for them to use. So it requires the least amount of information. Okay, so we're going to take I'll take a bit of a run through the calculator now. As you can see on this particular screen, the calculator can be found at that particular website address, which is the COVID-19 Tourism NI Support Centre. And then there's a section within that called Business Support Advice, and then a subsection called Operational Performance. And all of the calculators are listed in there under the various parts of the industry that they relate to. So there's one for bars and restaurants, one for hotels and guest houses and other types of accommodation and so on. And then there are the attractions and the activities calculators. And as I said at the outset, they're also already supporting videos in terms of how to use the calculator. And there's also guidance notes in there equally in terms of how to use the calculator. So if you just bear with me for a second, please. Now I'm going to switch over to the actual calculator itself. So just give me a few moments here. Okay, let me just zero this screen up. Okay, so when you open the calculator, you're presented with this page initially, and really these boxes that are sort of highlighted in pink, these are the areas that you can enter data in. So they'll have nothing in them at this stage. So it'll be completely blank. I've already pre-populated the model just to save a little bit of time. So the standard calculator is the one that I expect most of you will want to use, even if it's only initially, because it's probably the easiest one in terms of just testing it to get comfortable and get familiar with the layout, and it requires a lesser amount of data than the detailed one. But we'll have a look at the detailed one as we go with that as well. As you can see along the bottom here, there are a number of what are referred to as tabs. So these are separate Excel sheets or calculators. There's a standard, there's a detail, which I've already referred to. For those businesses with a food and beverage option, the data in relation to that area of your organization goes in there. There may also be businesses, or there will be businesses out there with a retail aspect, and again, that information will go in there. And then there's one called Other, which is a wee bit of a throwaway. And what's really meant by that is it's you can test if you're planning and introducing new services, then you can sort of test how you think they might be performed. But we'll have a look at that. We'll have a look at that later on. And then there's also an overall summary, which essentially draws the results from all of these tabs or calculators. And obviously you only use the ones where you actually have that activity. It draws them all together and lets you see them, really everything in one page, and also lets you put information in for last year if you want to see the change year on year in terms of what your expected performance is likely to be. The starting point here then, really, in terms of all of the calculators, a little drop down. This first pink colored cell is really, as I say, denotes where you can enter information. You don't have to enter information into everything because you may not have some of the costs associated with the business, or you may not have some of the services that this might be asking for. So you only enter those in those cells that relate to your organization. So here the first thing is with little drop down menus. You can see when you roll the pointer and you put it in that cell, then you have a little drop down menu about the month. I just happen to have December 20 in there, but if I flick it over to February 21, for example, it picks up the number of days per month, and that's really just so that for forward calculating, if you've put data in for 4 weeks or 3 weeks, it then effectively prorates that information up for the number of days in the month. An important point, obviously, as I said at the outset, was that the calculators were really designed around businesses where there was going to be some constraint brought about by social distancing measures, and therefore the model asks you what was your original capacity or throughput per hour, for example, and what is it likely to be restricted to now. Now, accept that that might not be an exact science in your case, because you're not a restaurant, for example, with a fixed number of seats in it where it's easy to calculate the social distancing. Many of your cases, I suppose, is going to depend on the nature of the visitors and the way that they arrive and so on. But the model needs you to put an estimate in there, and you can override that, and I'll show you that in a second or two, what I mean by that. It then asks you for the number of hours each day that you are going to be trading. So in this, you can see quite easily forward here, what I've done is I've just 8 hours every day and 6 hours on a Sunday. Another little feature of the model is where you see a cell with a little red triangle in the corner, there's a little note in there that pops up, and that it just provides additional information or explains what information is being asked for and why. So in this particular case, you can see that's paid admissions, basic ticket access, and that's for those venues with basic access ticket. And you put the number of ticket sales that you expect each day in that particular row. The one below is where you may offer an enhanced ticket sale, for example, if you're an attraction. So the next part of the entry is you then enter the number of visits each day under each of these categories. Some of you may have free admissions. Some of your organizations may have membership admissions where they pay an annual subscription or membership and they get free access when they want. Places like National Trust, for example, do something very similar. And you enter in here then the number of visitors each day by the particular category. And in the detail calculator, if we just flick over to that, you'll see that there's a slightly broader range of visitors. The other thing as well is you can rename these as, if they're highlighted in pink, you can call that whatever you want. So you can. So even though I've got them named in there at the moment, if it's in pink, you can change that to a description that suits you. So in this one, it's pretty stock, so you can't change these descriptions along here, but where they're highlighted in pink in the detailed one, you can. So you enter that data, and then here we have your average, historically your average ticket price per visitor type and net of any taxes. Now there's a little calculation that goes on down here. Then it looks at this. It looks at the number of hours, that you're open every day, and your maximum throughput per hour. And it makes a basic assumption that throughput is constant per hour. So it then comes up with an average, and it says, well, look, there's your expected throughput per hour. There's your average throughput per hour. Now, in the real world, I know it doesn't work like that. and that you have some days where you're going to be busy in certain hours and other days when you're going to be busy in other hours. All this is doing is highlighting that, look, there may come points here where in theory you could have more visitor throughput than you should be having due to COVID-19 restrictions, and it highlights here that what the potential excess is likely to be on the particular days, and then ask a simple question: are you sure you can safely admit the excess visitors? And if you say no, so you either put no or Y in, and if there's nothing in this cell, it doesn't really matter what you answer here. But for example here, if we say no to those, then it assumes that you're not going to take those visitors because you can't, and therefore it does not count their revenue or any costs associated with them into the calculations. If you say yes because you know, for example, you've got lots of family groups coming in and you can move them through much more quickly, for instance, than you could people turning up in ones and twos and what have you, then where you may not be able to push through your maximum volume in an hour, then you can make that judgment call because you know your business much better than I do, and I couldn't possibly read a formula that accounts for everything. So you've got to make a decision now. So we'll look at that in a wee second again. What it then does is it asks you, look, if you offer a membership, what's your average membership income per week? So in this case, the organisation, in theory, would have 52,000 membership a year. There's £1,000 a week goes in because that's in theory, part of your income. Now, very simply here, it asks you, look, what's your expected staff costs every day by customer-facing staff and non-customer-facing staff, and you'll probably know that off the top of your head, but you simply enter a fixed amount in there, and again there's a little pop-up there that says, look, don't forget to be sure and add in your employer's costs. So you've got employers' national insurance, and in many cases you may have employers' pension contributions as well. So make sure you add those in. Roughly, we calculated on average about 10.4%, but that could be a bit higher, a bit lower for each individual organisation. So you can decide what you need to add on. So these numbers should include that. And the same logic applies then for non-customer facing staff. Also then, you have a choice here about other operating costs of your organisation. Do you want to treat it as a percentage, looking back over your history, or other costs could be X% of our total income every year? You can either enter it as a percentage or you can enter it as an absolute amount every day. You decide which one you want to enter. If you inadvertently enter both in, it will prioritize a percentage, so it'll take the percentage and ignore the absolute amount. But if you put an absolute amount in, just zero the percentage, make it zero. And the other information then you need to put in is any other expenses per week that relate to the organisation. So, for example, if you're paying rent, or many cases you won't be paying rates, but if you are, maybe what your insurance costs are, divided for the year, divided by 52, so it's that amount a week. What you would maybe normally pay for maintenance contracts, maybe you have lifts and escalators or bits of equipment, so on and so forth, the average cost per week, put those in there as well. And that's it as far as the initial calculator is concerned. This area highlighted in this sort of cream or custard color is what the model thinks your trading is going to look like for that particular week. So for instance, your paid income is based on what we have above is £12,225, and your membership income, if you recall, we assumed here £1,000 a week. It spreads out over each day that you're open. So it does. The payroll costs, it has picked up, so it has from the data that has been entered up here, and it apportions that on the basis of turnover each day. Your variable cost of opening, which we had on this 10%, it slots that in again on the basis of turnover every day, and then it takes this information down here and it spreads that again, albeit it'll always come to this amount for the week. It takes a little spread of that, so it does equally on the basis of turnover every day. So if you only opened one day, all of that cost would go in against your income on that day, and it tells you on a daily basis then whether it thinks you're going to make a surplus or whether you're going to make a loss, and then you have your full week amount, your full week here, and it also then just pumps out that's your payroll cost as a percentage of turnover, and many of your businesses will have an element of variable cost. So you might decide, look, we need to get that cost down to 40% for the week. So maybe now you're starting to think about, well, what do we need to do? That seems a bit high. What do we need to do to reduce that for the week, given those visitor numbers? Your variable cost probably can't change a great deal, and your fixed costs certainly aren't going to change a great deal. Or you might decide, look, that seems very low, and maybe what we need to do is try and get more enhanced visitors in for that particular week and try and drive that average spend or that average entrance fee up. Now, just one point I made was, look, if the model thinks that you are going to exceed your hourly capacity, you have to tell it whether you can reasonably say we can deal with them or we can't. If you look here, if I change this to no, then it should ignore then those excess visitors, and the income should drop, and obviously the projected surplus should drop. And you can see straight away, if I'm saying, look, I don't think I can cope with these additional 20 visitors throughout the day, then simply say no to that, and the model will say, well, oh, right, you can't deal with that, so I'm going to ignore those visitors. And what it'll generally do is it will take an apportionment of that reduction in visitor numbers on the basis of the different types of visitors you have coming in that day. So it won't allocate it all to the basic ticket, and it won't allocate it all to the enhanced ticket. It'll basically prorate it because it doesn't know which visitors you can't take. So as I said at the outset, all of this information and the data you've entered down here automatically and your selling prices gets dragged across to subsequent weeks. So in week number 2, then, for example, what it does, it automatically draws across your hours of opening. So these sales have all been picked up from week 1. Now you can change them if you want. And it'll change the same day in subsequent weeks to whatever number you revise it to. But if you're not going to revise it, if you're going to be open the same hours every day, it'll just pick all that information up. So the only data you then have to provide in week 2, 3, and 4 then, if you're not making any other changes, is your visitor numbers. And again, you slot them in here, and we have it pumps out here where it thinks, again, that you may have an excess of visitors over capacity, and you've got to tell it. Whether you're going to exceed that or not. All this information again has been drawn across from last week, but you can change it if you wish, given that there's a change in visitor numbers. And we're back to, so that's all you have to do in subsequent weeks. At the very least, all you have to do is put in the visitor numbers, or you may have to change some of these projected costs. But if you don't have to change them, it really is that simple. And if we slip across to week 3, for example, same thing, everything's drawn across automatically except this. And again, you can change these if you want, and just be mindful you have to answer yes or no to that. And then week 4, similarly. And so there must be an easier way. You're probably thinking to yourself of seeing how we're performing for those 4 weeks, and indeed there is. And this is all explained in the video, and indeed in the notes, the guide to the calculator. So here we are, a summarized version of what happens every week. It's telling us, this really is just telling us how many days we're open for the week, and it's showing us our performance each week. It's saying, oh, we've got 28 days information there, but there's 31 days in a month, and it prorates this up to give you a projection for the full month. So it's what it's expecting here is that, based on those entries, that we could make £20,000 in that particular month, and it allows you then also for the same month in the previous year to slot in comparables if you choose to do so, and it lets you see any increase or decrease year on year. So that's the standard calculator. Now, if we take a look at the detailed calculator, what's really different here? Well, again, you got to put the same information in, the hours that you're going to be open. You have a little bit more, I suppose, choice of types of ticket sale, for example, or visitor type that you can slot in here, and you can edit these. You can change these names whatever way you want. You put your ticket price in here, and if you offer a discount for certain, you put your average discount in here. does the same calculation down here about visitor throughput per hour and whether or not it thinks that you're going to exceed that. So you again have to answer yes, I can, or no, I cannot accommodate those additional people. Membership income as per the standard calculator. And then there's a little bit more detail in terms of the staffing side. So it's asking you every day for the number of hours. So it is by different staff member type or whatever name you want to attach to them. And then you've got to put an hourly rate in here. It's automatically pre-populated with employers' national insurance and pension, and a provision for holiday pay. You can change those to suit your own business circumstances. And as you can see, it gives you just a much bigger choice of information to put in. And I suppose if you were looking at reducing costs, or you felt you had to reduce costs on certain days, it's easier to see the impact of that because you're putting the number of hours in directly, whereas in the standard calculator, we're just putting a lump sum in. So we don't necessarily know the detail behind it unless we've worked it out. As an alternative to doing that, you can either put the staff hours in as you could do in the standard calculator as round sum amounts here. So you can choose which way you want to do it. And then again, you have other departmental costs which are variable. So they go up and down based on your number of visitors. And then your fixed expenses, which again, we did in the standard calculator. And it really just pumps out the same type of information, but you put a little bit more information at the front end, which allows a little bit more analysis for you, so it does. So that's the two primary calculators in terms of whether an attraction or an activity. For those organizations then that offer food and beverage service, as I said, there are a number of tabs as we refer to them at the bottom of this particular calculator. If we look at food and beverage, then you need to look at that separately. And what the model does, it again asks you, oh, what month are we here? Are we looking at? What was our roughly our pre-COVID-19 throughput per hour? What are we limited to? And this is probably a bit easier in food and beverage scenario simply because you have tables and distances between them and so on and so forth. So you put in what your current social distancing measures in terms of what your capacity is likely to be. Again, you slot in your number of hours open. What the model then does, it automatically drags across from either your standard calculator or your detailed calculator your expected number of visitors for each day. So it's saying, look, this is the potential market. Now you may have walk-ins who don't go and visit the attraction, but it will still allow you to change this. So it's just saying, look, in terms of visitor throughput, that's our potential target. So it is for each day. So how many do I actually expect to come to the cafe? And you slot that in there, and then you slot in below that, how many do I think will sit in the cafe? Now, if you have other areas where people can, say, buy a sandwich and go and sit somewhere else, then you would slot them into this section. This is really driving this aspect here about what's your volume each hour based on social distancing requirements. And again, it does a calculation here. So on Friday and Saturday, it's saying, oh, it looks to us as though you can have an excess throughput of 50. Can you accommodate those? Well, yeah, maybe you can accommodate them in another part of the building, or maybe, we think we're going to do more than 40 an hour because we know at the weekends we tend to get more families, and therefore they tend to take full tables rather than one person or two people sitting at a table for four and so on. And as I say, the model can't figure that out. You have to tell it. And then what you then slot in here is your average spend for sit-in food, net of VAT, average spend per guest or per cover on beverage, and if you have a takeaway option or they can eat outside, do you know the average spend? It might be the same as above, but again, it gives you the chance to slot that in separately. You then obviously have food and beverage cost of sales ratios, which for those of you that have already run the facility, is probably a key performance indicator that you're looking at on a regular basis anyway. So you slot those in there, and then you'll always have variable costs of providing that service offer. So that could be things like, historically your breakage of cutlery or crockery, or loss of cutlery and breakage of crockery, or your packaging that you use for some of your takeaway service and so on, equates to a certain percentage of turnover, and you slot that in there. And then in this case, we are asking on a day-to-day basis, look, tell us about your catering staff. How many hours are each going to work every day? Or you can put in just a total amount if you choose to do that, and then you put the hourly rate of pay in there. And for the cafe, that's all you do. And what it then does, it then does this little calculation, giving you a little analysis of the revenue from each revenue stream. So sit-in food, sit-in beverage, takeaway food, takeaway beverage. Your cost of sales calculation is in here. And then your payroll costs. So in this particular example, our payroll costs are 38.7% of turnover, and you might make a judgment call that says, well, that's a bit higher than what we would normally do, and that equates to £5.09 per cover in the restaurant, whether they were sit-in or whether they were takeaway. It just takes that average, and you can see here the average spend and the average cost per cover in terms of food and beverage product. And there's your other variable costs. So we have £1,246 of surplus before we'd have to deal with our fixed costs, and our fixed costs in this week are £1,357. So it looks as though we could make a loss in the cafe this week. Now, is there anything we can do here to mitigate that loss, or at least either reduce it or turn it into a small profit? And probably the easiest thing is, do you need all of the hours here if you've entered the data in that way, or can you do something that stimulates increased demand during some of those days when you don't have an excess of visitors coming in? So it doesn't give you the answer, but probably easily gives you the tools to go away and think about what you might do. So again, it drags all of this information across into subsequent weeks. So it does. So the only entry you have in subsequent weeks then is your number of covers. So it's picked up from week 2 entry, either in the standard calculator or the detailed calculator, depending on which one you've chosen to use, the number of visitors to the activity or to the attraction. So in theory, that's your potential market for the cafe. And then you decide then, and no doubt you'll have some ratio of visitor throughput that actually use the facility. You can then plot that in there and decide which ones you think are going to eat in the restaurant and which ones might eat elsewhere. This is all dragged across from the previous week. And then the only other change you have to make then on a week-by-week basis is the number of hours. It automatically picks up for each staff grade which you've entered the hourly rate. So unless you change these, then you don't. If you change this, you need to change that. If you don't change any of them, then you just need to enter your number of hours in. And in this, as we can see, as the volume of throughput goes up, we lost. In this case, we've lost money on Monday, Tuesday, Wednesday, and Thursday, but actually we've done very well on Saturday and Sunday. Friday and Saturday. Sunday was a bit touch and go, but overall, that's what we made. And weeks 3 and 4, if you choose to enter the data, are done exactly the same fashion. And once again, in this sort of custard color area, we then have an overall summary that says, well, that's a performance on a week-by-week basis. So it is. We did very well in week 4 as volumes to the business started to ramp up. That's our prediction there for the full month in terms of profit. And we don't have a comparable in for last year, so I neglected to do that, but you can easily look that up. Now, some of you will also then have a retail offer, and again, the model can accommodate that. If you don't have a retail offer, you just ignore it, and clearly you don't use it. So once again, you don't. In this case, you don't need to slot the data. It's pulled it across from the cafe, whether you offer retail or not. It'll sit there, but it won't do anything else. And if you rent the space out, then you just put your weekly rent in there, and really you've very little else to do other than put some costs in that you may have to pay, albeit even if you're renting it out. So I don't know, maybe you pay specific insurance or something, but you tell that further down the sheet. Again, it pulls across from either your standard calculator, your detailed calculator in terms of the number of visitors, overall number of visitors. That's your potential market for your retail outlet. And again, those of you that operate them will have a fair idea of, if you get X number of visitors through the facility on any given day, you'll get Y number of visitors going into the retail unit. So you slot that in there. You'll probably have your average spend from history. Again, you can slot that in, and then whatever your cost of sales are in terms of your product cost of sales and any other variable costs that you may have. And again, you'll know that from your history. The only other data you have to put in here then is hours for retail staff, if you operate the facility yourself. And again, here we have the hourly rates, we have the number of hours, we have the names of the staff, or the categories of staff here. And again, you can change those and make those whatever you are. And it then gives us a little calculator. So our average spend is £6. Well, we knew that already. Our retail cost per pound of per sale is £1.80, or 30% of our sales value. Our payroll cost per sale average at a £2.79, which seems quite high, but of course you have to staff the shop the whole day. And you can see here then we have fixed costs of £80, and that isn't entered here. It's actually entered in the standard of the detailed calculator. If you have a revenue stream, it then starts to apportion those fixed costs over all of those revenue streams. If you don't have a shop, then all of those fixed costs get allocated to those areas of the business that you actually do run. So that's an automatic calculation. You don't have to do anything. It takes care of it. And you can see here that the shop lost money on Monday, Tuesday, Wednesday, Thursday, but we made money on Saturday and Sunday. But overall, it wasn't great. We had a loss of £262. Week 2 then, all you have to do, it drags across once again the number of visitors to the attraction, and you just have to slot in what you think your sales are going to be. This is all drawn across from the previous week, as is this, and the retail staff names that you offer. And again, all you have to do then is add in the week. So once more, it's the minimum, once you enter the data for week 1, it's the minimal amount of information that we can possibly get away with to give you some meaningful output. We don't want you putting information in twice where you don't need to do so. Week 3 and 4, we do exactly the same thing, and you have this little summary again at the end. There it is on a week-by-week basis. So we started out poorly, but in fact, it started to gather a little bit of pace as the month went on, and overall, we're expecting a profit in this particular case of £3,700 for the month. Now, one of the other calculator that I wanted to talk to you about, or the other tab, was the other services template. So, for example, if you have an opportunity, or you're considering adding something to your current portfolio of services, then here's an opportunity to try and test that. And in this particular case, I'm assuming that this organization has a room somewhere that can be hired out as meeting space, and it's never really used it in that fashion previously. And maybe the spaces, maybe it was an old retail unit that now no longer functions, but could be converted in some way quite easily into meeting space. So is this a worthwhile thing for the organization to be doing? Well, let's have a wee look and see. And it just doesn't, it could be anything. So as we work our way through this, I've chosen an example of meeting space. So what I'm saying here is, look, and again, you can change this wording to whatever you want. This is the income I expect to get each day. Every day I hire that out for. There's a lot of local businesses nearby, and they want meeting space. They want a different venue. They don't want to go to a hotel anymore. They want something a bit new, a bit quirky, a bit unusual, and we can provide that. So the number of customers each day then is 10 and 7. They're obviously going to want they're going to want fed, they're going to want their tea and coffee and one thing and another. And of course, if we've got a cafe, we can easily provide that. So we're going to charge them £10 a head for their food and £2.50 for their tea and coffees. We've our expected food and beverage cost of sales in there. And, let's say we offer, I don't know, let's be out like surfing or something. I don't know. We could slot that in here and then say we've got 5 of them are going to surf on this particular day, and it's going to cost them £25 each. You can change this whatever way you want. It's flexible, really, to suit your circumstances. So you have other options here. You can tell if we call that surfing, for example. I hope if I could spell, then it should drop down here. So you can see it's now updated. So now it's saying, well, tell me how many there are and what price it's going to be. So if there were 5 that day, for example, and it was £25 a head, then it will pick that up as well. So What other information do we need to add in? Again, any particular staff time, because some of these services are likely to be fragmented, they're only going to work on particular days. Then in this case, I've chosen to put a supervisor in to look after the meeting room, for example, and I'm saying, well, look, they need to be on hand 6 hours a day, and they're going to cost me £11 an hour. By the time I get all my add all my additional costs on, it's a cost of £13.58 per hour. So you can, the calculation will automatically do that. Or once again, I can put a fixed or a round lump sum number in each day rather than fill out the hours every day. And what it then does is it only picks up the days that you're generating a revenue, and it then pulls all the costs in from the information we've entered. And it will also look at the whole fixed cost of the organisation and make an allocation of the fixed costs of the organisation, insurance, rent if there is any, rates if there are any, and so on and so forth. Subscriptions, repair costs. It'll allocate a proportion to this function on the basis of if it's generating any revenue. If it's not, it will just completely ignore it. And then it'll tell you whether or not you made money. In this particular week, that example suggests we make £111 after covering some of the costs, the broader fixed costs of the organisation. Week 2, all we have to enter is the rental income per day and the number of guests. And it pulls everything, and of course the number of hours staff are working, and it pulls all that information across. And what you might find is when you start out, if you're offering a new service, when you start out, you probably expect it to incur a loss initially, but you would like to see some real solid progress, at least over the first 4 to 8 weeks, in that, you know, if it's incurring a loss, that you'd like to see it get to break even or start to make a profit. If it continues to incur a loss, then clearly you wouldn't do it. And once again, we have a little summary down here. So we do of the whatever weeks you've entered data in for, it will summarize all of that. As you can see here, we've only put information in for a certain number of days in each week. It knows that. It knows that you've only got 16 days in there. So it will do a calculation and say, well, look, you know, if you were trading for the full month, this is what we think we could do as a profit. So I also said that one of the other features of the calculator was the overall summary. And so what's happening here is it's pulling the information out of all of these tabs where data has been entered, and it's pulling it together on a weekly basis. So in this particular case, we didn't populate the detailed calculator, we populated the standard calculator. And it'll be either or, you'll not populate both. And if you happen to do so by accident, it will prioritize. I can't remember which one it prioritizes first. It takes a detailed calculator rather than the standard calculator if data happens to be in both. So it looks here total revenues for week 1. So with 13,000 in the main attraction or activity, with 9,000 in food and beverage, with 2,000 in retail, 2,700 and £500 as that other service that we might offer. It gives a potential total revenue of 25,000. There's a cost of sales, a gross profit, and in theory a profit for the whole week of 3,000. And it does this in one screenshot for all 4 weeks for all services for each of those 4 weeks, and gives you those projections. And then it pulls everything together. So it does at the bottom, and it looks at that and says, well, for the days that you've entered trading information in for, our total revenue is 117,000, and there's a little analysis of it there. And our projected total profit for the days that you entered data was 26,000. If we had data for the full month, in this case it's 31 days, okay, you're not going to be open for the full month of December, it would have been 35,000. How does that compare to last year? So you can put last year's results in, and it will tell you where you've increased year on year or where you've decreased year on year in terms of turnover, profit, and then an analysis of your turnover. So in this case, you can see we're down a little bit in terms of our activity income. We're up in food revenue. We're up in beverage revenue. We're well down on retail income. And in this case, if we chose to offer that additional service, then we didn't have it last year, so that would all be new revenue. So that's the calculator. I know it's quite wordy what I've gone through, but hopefully, if nothing else, I've demonstrated to you that actually once you put the basic data in week 1, It's really simple to use after that. And hopefully it also will guide you in terms of, look, these particular days don't look great from a trading point of view. What won't necessarily give you the answer, but certainly highlight to you, look, maybe maybe we can do something in those days that help address that. So from going to that, then what I want to do, I need to go back to the main slides now. So we do. It's really just to wash up here before we take a Q&A session. Okay, so look, as I said at the outset, there is Tourism NI have quite a lot of material. If you haven't looked at the website, there is an awful lot of material there as a response to COVID-19 and as a response to what the industry itself has been saying it needs. So, my advice most definitely is to, keep a very close eye on that information that's there in the support hub. There's a lot of individual information about in particular government interventions, and that's being updated on a weekly basis. And indeed, you'll probably be very well aware that there was some additional announcements from the executive earlier on this week with additional supports. Now, the fine detail, the whole saying, isn't it, the devil's in the detail. The fine detail of that hadn't been published at the same time as the announcement. So therefore, as that becomes clear as to what the conditions are for qualifying for some of that support, it will be updated in the Tourism NI COVID-19 Support Centre. So please, my advice is, to please keep an eye on that on a regular basis, because as that information starts to filter through, that will help guide you as to whether or not you're going to qualify for that. There's also some other tools in there, a financial modelling template with cash flows and so on in it. So that can be found at this link. And just as importantly, or more importantly, Tourism NI have recently launched an inquiry helpline, all related to the COVID-19 supports that are available to the industry. So that's a telephone number for it. And if you feel you would rather talk to an individual rather than necessarily trawl through various documents, then give that number a call, and they'll give you whatever assistance they can do. Moving on then to our last topic. For those of you that are working with your accountant or maybe some organisation that provides financing for you, I think probably if you don't have that in-house resource, then hopefully here's some handy tips and ideas about maybe some of the conversations that you need to be having or you ought to be having. Firstly, for smaller organisations, probably you may get accounts produced quarterly if you're lucky. In some cases, you'll only get accounts produced annually. And I think, given the current environment that we find ourselves in, that's not nearly good enough. And probably the layout of the accounts and so on is to a fairly standard template. And whilst in theory there's nothing wrong with that, I'm not entirely sure that that it's going to be as helpful to you as it could be, and perhaps more detail would be very useful in there. For example, visitor numbers, give you an average spend or an average ticket price per visitor, an average spend in the restaurant, for example, or cafe if you offer that. And my view would be that if you're getting accounts annually and you're not a particularly large organisation in terms of income, then my view would be that you probably need to be looking at that quarterly at the very least. And ideally, everybody should be looking at some form of management information on a monthly basis. Now, that's very easy for me to say and recommend, but the reality is with that comes a cost. And I think, that's a conversation that you need to have with whoever provides those services for you, that if you're going to get more regular information, is the cost going to be onerous? Because really, you have to balance up whether or not you can afford to do that. But if you can do, I would strongly recommend that in fact, you get that information far more regularly than you do presently. Also, if you want specific KPIs, key performance indicators, so we've thrown some out there: average ticket price, average spend in retail, average spend in a cafe, for example, average staff cost per meal. So then ask your service provider to give you that information if you don't have it close to hand. You probably have the core data through your ticketing system or through your till system in terms of the number of transactions. So you probably have that information available. You just may not be using it in a way in which the model pulls that sort of information out. And again, if you're going to get your accountant or your service provider to give that information to you, then you need to give those results to you. You need to provide some of that basic information to them. So you need to sit down and agree, what is it that you want? and what additional information that service provider needs to give you what you want, and the cycle and how you're going to deliver that information to them. Also, then, you know, if you're not, if you feel uncomfortable in terms of dealing with a question in the house, then again, your accountant or your service provider, if you think you're going to trade in a loss, how much additional revenue does it look as though you need to generate to either get to a break-even position or make a profit? And you know, that doing that can really focus your intention in terms of you know, maybe certain things you can do to reduce your cost base in any given week or on any given days, or maybe setting a target in terms of trying to get more volume through. And I'm not advocating spending lots of money on marketing. If you've got social media channels and so on, you can push stuff out through that. You can also push a lot of information through Tourism NI, of course, because their website is updatable at all times. So don't forget that. Other conversation points then, if you've got new service ideas, well, the calculator will give you an idea whether or not that's going to make money or break even at the very least in the early weeks. Have that conversation with your accountant or your service provider as well. I think it's just useful. They can either do the calculation for you, or the tools are there in the model to help you really make a decision about whether or not you should pursue it. Other opportunities for cost reductions apart from the obvious in terms of, well, we've a lot of, you know, sort of casual labor, and maybe we don't need to bring them in. If you're an organization that is paying a rent, for example, and that rent is fixed, maybe it's a conversation you need to have, and you can have that initially with your accountant about, do you transfer, or is there an opportunity for you to transfer to a turnover or a sales-based rent? That's becoming quite popular, of course, in the current climate, and really driven by what's been happening in the high street. You know, I suppose a fixed cost is only a fixed cost until you can convert it into something else. Now, in the long fullness of time, it might cost you more than the rent you're currently paying. But, you know, in those circumstances, you're only paying it when you're actually generating the cash to cover it. Whereas at the moment, if you're paying a fixed rent, come hell or high water, unless you have an agreement with your landlord, you've got to pay that. So there's some of the things that maybe you need to look at. If you're paying, for example, in your insurance and lump sum, can you spread those costs? So this is all about trying to manage your cash flow in a very subtle type of a way. Also, don't ignore the opportunity to increase prices. I think you know, you might think, Craig, in this climate, it's the last thing I want to do, but I think there's probably, when you do get the chance to reopen, there's a pent-up demand there for people to go and do things. I think everybody's getting to the point where they probably are a bit sick of looking at the same four walls, and they'll certainly want to go and do things with their family when it's safe to do so, and the opportunity presents themselves to want to do so. And, you know, I'm not advocating putting prices up just for the sake of it, but the reality is your costs of doing business are higher than they were 12 months ago, if only because you've got restricted capacity or the particular measures that you have to put in to make sure that your environment is safe. So therefore, I think, you know, most rational people accept that you know, the costs are likely to rise. So don't miss that opportunity. And importantly, in all of this, are all of the government supports being maximised that you can get access to? As I've noted, all the detail is going to be in the COVID-19 support centre on the Tourism NI website. That money's there for a reason. That support there is there for you. You know, it may not be enough for everyone, but it's there to try and help you get through the most difficult times that any of us are likely to challenge. For goodness sake, please make sure you're getting your fair share.